Welcome back, folks. Tommy O'Brien with Tom O'Brien, and we got a treat. We're joined by our man Jack Gleason this morning, Major League Trading. Jack, good morning. Welcome back to TFNN.
Morning, Jack.
Good morning, guys. How's it going?
It's going great, man. How are you?
Good. It's pouring rain in Chicago here right now, so I'm hoping for a little bit of sunshine. If you guys could send it my way from Florida, that'd be great.
Summer solstice, first day of summer. We'll get some sun over there, man. You'll get some beautiful rain. The trees will be green. The grass will be growing. That's the way to start off the summer, right?
Yeah, that's right. I'm going to a Grateful Dead concert with my dad Saturday to celebrate a late Father's Day, because my dad was actually down in Florida for Father's Day, so I'm kicking it the right way.
Man.
Fantastic, man. My dad and I, we love going to concerts, man. We've hit up U2. We've hit up Dave Matthews, man. Gotta love it. That's a great Father's Day, man. Perfect. Grateful Dead. Enjoy.
Super cool. John Mayer, too. So
nice. I like John Mayer. That's a good, I know. He's touring with the Dead now. That's pretty sweet. It is, yeah. So, back to markets, man. We got some markets for sure, Jack. I know you sent over a few charts looking at some of the indices. I got those charts. So what are you looking at this week, this morning? Talk to us.
Okay, cool. So which chart are we going to start with, just so I can pull it up?
You tell me. I got them all, man. I know you got the Russell, right? You got the Dow. Where are we starting? Okay, perfect.
Russell. So I sent that chart over this morning. You can see there's a gap, obviously, between where we're currently trading and where that chart is, where I sent the first level support I was looking for in the Russell was at 1691.4. Right now, the low of the day is, I believe, about like 4 ticks just below that. So I needed to come on about 15 minutes earlier when that support level. But we got that 1691.4, and that's a 38% retracement from the breakout of the last swing high. And that breakout of that day, I'm just going back on my chart here, was, let's see here, that was on the 22nd. Now, typically what we'll do is react off that 38.2, and you can see that reaction. Anytime I have a level that I've drawn up and we're reacting, to the tick or within a couple of ticks, I know that there's some kind of computer program spy in there. So if we do make that next wave lower, the level I'm going to want to watch and the level you guys are going to want to mark up is going to be 1682.3. I have my support zone set up there. And if you guys remember last week, I believe it was the 2768 support level I talked about, trading in the S&P 500. We traded 2766, so we dipped 2 points, followed up by a 19-point rally. So, a lot of times, those are the types of reactions I'm looking for this. And then we can move on to the Dow now that you guys have those levels.
Just real quick, Jack, just so that's 1691. So that was a 382 retracement?
Yeah, it's a 382 from the previous high, the breakout, called an extension series. It's something I teach in my Fib course.
And where is the 1682? Does that correlate to a Fib number?
1682 is also going to be, that's the 50% retracement.
50,
so when you do these breakout bull runs, especially, the the Russell's been the strongest market here, the Dow's been the weakest, you'll have these high-to-high draws test off the 38% retracement. It's kind of something that nobody really looks at. And then if we do bounce off that, if we come in for the second test, I won't look to trade the second test. Instead, I'll wait for us to fall all the way back down to that 50% retracement.
Nice.
That level is at 1682.3, where I have my next alert sent, and the market's still looking weak. So I think there's a possibility we end up trading those levels.
And it's pretty cool we got back down there in like the 5 minutes in between you sending over those charts and coming on the air.
Yeah.
Right? Okay, jumping over to the Dow. We got it up.
Okay, cool. Let me pull it up here then too. So the Dow is gonna, obviously the Dow's been the weaker market, so that's probably gonna be the last one to turn. But also I'm thinking that the rest of these markets won't end up producing a rally until the Dow can actually find its support level. It's led the entire market down here, kind of been telegraphing this reversal. So I'm looking at a couple of different halfway back longs, and there's 2 different swing lows we've had this year, which just gives me a general zone that I'm paying attention to. Now, the first level I'm going to be watching is 24,443, and that is the halfway back from the most recent daily swing low, and that's just a traditional move. That is from the low of the 3rd of May to high. Cool. And then if you go to the low of the 2nd of April to high, that's where I have that green box drawn up there. That level is 24,368. So I'm going to be looking for buying pressure to come in there, and you can see in late May, that's really where the market bottomed out and actually began, finding some support levels. So I'm expecting us to retest there, and I really wouldn't be eager to get long the Dow or really any of the other markets until we start trading those levels. So I think that's pretty significant for us to trade, and it's just a matter of time before we test those levels. So that's what I'll be watching in the Dow.
That's nice, man. I know, Tom, are you looking at that chart? Because that's a confluence deal of two different Fibonacci trends, right? And Tom loved those, Jack. He's a big fan. So I'm looking at those, two different Fibonacci retracement levels and where that zone is, and that's where it's nice. You have that marked out with that green box.
And in particular, that Dow's been so weak. I mean, if that can turn, well, that's going to give the other one some oomph. There's no doubt about that. But it's pretty amazing when you think about that. The Dow actually has topped out January. So we'll see where this shakes out.
GE out this week. Have they mentioned who they're going to be bringing into the Dow?
Yeah, it's going to be Walgreens Boots. Walgreens Boots is going to be in there to replace them.
Cool.
Health sector taking over the world, Jack. That's what's happening.
Yeah, for you guys, you guys probably spending 20%. What do they say? 20% of GDPs now on healthcare. I'm still young and healthy, but I know one day I'll be burning through all my cash.
The numbers are crazy. I hear you. They're almost unfathomable. Okay, so we got 2 minutes. Where are we jumping to? What's the third one? What are we looking at?
S&P 500.
Perfect.
And then for that, the biggest level I have, which we've actually already tested, so it'd be a second test, is the 2735 zone. We tested it in the overnight session. Typically, I like to see these levels test during the regular trading hours session, so you have fills on all the time frames. You have a higher volume bottom. A lot of times when we trade those levels in the overnight session, we can come down and retest, so SPY buyers can get in, stock buyers can get in. So 2735, 2736 is going to be that halfway back long from that swing low that you have up on the chart. And then if we do not hold that, the next level I'm going to be looking at is 2715. And once again, these are try to come on with the bigger support and resistance levels that really aren't going to change from a day-to-day basis because they're swing lows to highs. But the low of the 29th to high is at 2736 support. And then I have a different high-to-high sequence that's held every time we come into our 50% retracement, and that's the 2718. So I have alerts set at both of those levels, and that's where I'm expecting the S&P to come in and bottom.
Nice.
Jack, when we take the low from last night, I guess that's 2735. When we break the 0.618, are you looking at to go all the way back to that low? How do you look at that?
So when we break a 61.8, I consider that a trend failure, and I'll begin observing the opposing trend. So if we were to break the 61.8 of that swing low draw from the 29 to high, I would then actually begin pulling a halfway back, at least for observation, from the high of the 12th, which is the current high, the S&P 500 on the most recent move up. So I would take that high to low, measure, and continue to draw it until we pulled into that halfway back short. And at that point in time, I'd consider that a valid shorting opportunity, at least for an observation for a single day trade.
You gotta love it, man.
Jack, that's awesome, man. Thank you for the charts. Thank you for doing the work, getting ready, and for the great information for the listeners and viewers. Folks, Jack Gleason, MajorLeagueTrading.com. Check him out over there. Sign up. Jack, have a great time at the Dead with your dad, man.
Jack, have a great one, a safe one. Thanks so much, man.
Take care.